The Bureau of Labor Statistics reported that inflation over the previous 12 months was 2.8%. That was down from 3% in the 12 months ending January. That was good news for stock market investors. In this video, I'm going to go into more detail about the inflation numbers, describe the differences between government reported inflation numbers and the inflation that consumers actually experience, because there's a big difference there, and then connect this to stock market investors and discuss why this is important to stock market investors and why macroeconomic data like the CPI, which came out this morning, Wednesday, March 12th, are going to play a more critical role in how the stock market performs over these next few weeks. Fiscal policy, meaning the changes in policy presented by President Donald Trump, are having major changes in economic performance for businesses and consumers together. And so over the next 6 weeks, 8 weeks, 12 weeks, the macroeconomic picture is going to have an outsized role in stock market performance, more so than usual. And so this is especially important over these next few weeks. Let me explain in this video. I quickly wanted to let everyone know about this great offer for my channel members at the investor tier. You can gain access to my spreadsheet containing my ratings on over 130 stocks. I update this spreadsheet with multiple times and multiple changes per day, Monday through Friday. Additionally, channel members at the investor tier can get access to my spreadsheet with my discounted cash flow valuations, and I update this spreadsheet multiple times per week with multiple new companies added to this spreadsheet with discounted cash flow valuations. There's already dozens on the spreadsheet available now. You can get all this plus early access videos, plus member exclusive videos, plus priority response to comments, all for less than $15 per month. So what are you waiting for? Hit that join button below and start experiencing the benefits. All right, so the Bureau of Labor Statistics, the BLS, reported on March 12th, 2025, that the CPI for all consumers increased 0.2% on a seasonally adjusted basis in February after rising 0.5% in January. That was great news because we had, and I'll show you a chart in just a little bit here, we had been increasing inflation over these last few months, and there were concerns that inflation was getting disconnected from the 2% target that central bankers like to achieve in inflation. And over the past 12 months, the all items index increased by 2.8% compared to the 3% they increased in the previous 12 months. So we're seeing finally that downtrend in inflation again after several months of an uptrend. Now, the index for shelter rose by 0.3% in February. That accounted for nearly half of the monthly all items increase. The index for food also increased in February by 0.2%. Food away from home increased by 0.4%. Now, I always highlight food and shelter, and because this is more important than the overall number that the government reports. And this is what I was talking about in the beginning of the video, the inflation that consumers experience versus the inflation that the government reports. Now, this BLS report includes changes in prices for a number of things, and it also includes shelter and food in that number. The number for shelter is especially important because this is something that's not substitutable for consumers, right? If the price for rent and housing goes up, there isn't anything you can do about that, right? It's not like you can say, well, the price of shelter has gone up, so I'm not going to buy any of that, right? You can't make that choice. Whereas the price of eggs have soared, but as a consumer, you can make a choice and say, I'm not going to have eggs, right? I can have cereal. I can have other breakfast foods. I don't need to have eggs. The price is too high, right? Which in our household, we've reduced the amount of eggs we have for breakfast for the last several weeks now because you're able to make that choice. Whereas with housing, how can you make that choice? What can you substitute instead of housing? And so that's why the price for shelter is one of the most important items in the inflation index, and the price for shelter has been increasing faster than the rest of the inflation numbers. And that's important because you cannot substitute, so you have to pay. And if you have to pay that, that means less disposable income to buy other things. And so it's going to be hurtful for nearly every other business when the price of housing goes up, because consumers have less money left over to go out to eat, to travel, to buy electronics, to go out to bars, to watch a movie. All of that is less money allocated to those categories because you have to spend more on housing. You have no choice. You have to pay. Okay. It's similar for food, but not as extreme, because in food there's several different types of food, and it's rare that all food items are going up altogether. And so when the price of eggs goes up, you can buy cereal, you can buy oatmeal, you can buy other things and not consume eggs for a little while until the price of eggs comes back down, and then you can make that choice, right? And so with inflation, the important thing to consider is, are the items substitutable? If the items are substitutable, then the inflation is not such a big deal, because as a consumer, you can just avoid that category and say it's too expensive. We'll wait until the price comes down. And so this reading over the last 12 months, 2.8%, it's different when we look at shelter. So let's take a look at that. But before I show you the shelter, I told you I was going to show you the chart of inflation moving upward and now finally coming back down. This is that chart I highlighted. Between September and January, you can see the consumer price index was rising, and that was creating a lot of concern for stock market investors, because that's a 4 month trend, and it was concerning that this would just keep going and get out of control. But this downturn here in February was a big relief. At least it broke that streak of upward rising inflation, and we get a reprieve from that risk. All right, so here are the shelter numbers. In the most recent 12 months, the price of shelter has gone up by 4.2%. Now, shelter is broken down into two factors: rent of primary residence and owner's equivalent rent, which measures how much a house would be worth for owners if they were to rent that house instead. And that is up 4.4%. The rent of primary residence is up by 4.1% over the trailing 12 months. So actual inflation that people are feeling is closer to 4.5% than the reported 2.8% by the government's figures. Because this number, shelter, the unavoidable number, the number that almost everyone feels, has gone up more than the reported number of the things that you can change, right? If the price of cars are going up, you can choose public transportation. You can choose to walk. You can choose to take a bicycle. You can choose to change your lifestyle, to travel less, to use your car less. If you're using Uber, you can use Uber less. And so you have choices in those categories. Shelter, again, no choice. You have to pay. And so this inflation number is the most important out of all the numbers. And this is the one that's been out of control since 2020, right? If you look at house prices, they're out of control in nearly every region in the United States. You look at house prices are going up a lot, more so than the price index for everything else. And so in the actual inflation is much worse than the reported numbers. Now, the way that hurts investors is several. Let me start with the substitution effect. If you can't substitute for housing, you have to pay. That leaves less disposable income, and so you have less money to spend in leisure activities and all of those other things. That's why you've seen travel stocks coming down in the last week or so. Also because Delta Airlines even reported that people are traveling less. they're spending less money, and there's signs that the consumer budget is really getting strained, and there's no more room for consumers to keep spending on those leisurely activities because their necessities, the prices they're paying for necessities, have gone up by so much. It's not leaving disposable income. The price for food, shelter, transportation, insurance, medical care, all of these necessities have gone up by so much that people don't have much left over for these items. And so that's why you've seen travel stocks taking a hit. I wouldn't be surprised if travel stocks continue to remain under pressure, at least until we get more data about consumer behavior and consumer spending patterns. So that's one way that it's going to impact the stock market for stocks of these non-essential items. Another way inflation impacts stock market investors is through the purchasing power effect. Investors, when they're investing in stocks, they want to receive at least the inflation number, at least that much. Because if you have $100 and you can choose to invest it, the reason why you're investing your money is because you expect or you want to be able to buy more things in the future. You want to be able to translate your dollars into things and services. But if the price of those things and services are going up and you're investing your $100 and you're not earning at least the inflation number, then your ability to buy those things actually decreases in a year. Your purchasing power decreases, which is not what you want, right? You'd rather go out and spend your money today instead of investing your money and buying fewer things next year. And so when inflation moves up, market prices move down because the required return from investors goes up. And that's why I say inflation is the leading indicator for interest rates. When inflation increases, interest rates increase because investors require more to lend money. When inflation falls, interest rates fall. So I know a lot of attention goes to the central bank for changing interest rates, but they don't have complete control. It's really inflation that forces the central bank's hand. If inflation goes down, central bankers reduce interest rates, right? Because they don't need to have interest rates elevated when inflation is coming down. And the opposite is also true. And so that's another way that inflation is connected to the stock market. And the third and final way is the fear of this phenomenon called stagflation, where growth slows, right? You have like close to zero growth or negative growth in the economy, but prices are increasing. And so you have inflation in a non-growth environment, which is bad for business in a variety of ways. And investors fear this scenario so much so that when the probabilities of that scenario increases even slightly, it causes a big sell-off in the stock market. And those are the fears we're seeing now increasing because of the policies of President Donald Trump, the tariffs most notably. Tariffs are inflationary, and tariffs also slow down growth because as a consumer, if you see higher prices and you don't have enough money to pay for those higher prices, you don't spend that money, and that reduces economic activity, which slows down growth and creates job loss. And at the same time, prices are still rising because of the tariffs are creating higher costs for businesses to import goods. And so that's the risk that investors are highly attuned to right now. And so that's why I mentioned in the beginning of the video, macroeconomic numbers are going to play a greater role in stock market performance over the next several weeks. So I will have more coverage on macroeconomic factors like inflation, like unemployment, like GDP over the next coming weeks because it's going to play a more important role going forward. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.